Eric Mwathe, themwathe.com, with a weekend market analysis for world markets for the weekend of April 9th and April 10th, 2016. Let's take a look at markets here. We begin by taking a look at Asia, which was pretty much a little bit mixed. It's a mixed bag. China was down and Japan was up slightly. Let's take a look at the European close, which was, I believe, was good. About a percentage gain on Friday's close for the European markets. Take a look at the Americas here, and I did note that Brazil was up about 3 to 4% in Friday's session. Canadian market is also up about a percentage point. Take a look at the US market with about 2 hours and a half to go, and the US markets right now look pretty much unchanged, as we see that the market is unchanged right there. The biggest mover being crude oil, which is up about 5 to 6%. So let's take a look at those world market charts. We begin by taking a look at Australian market here, and we can see that over the last couple of weeks we've come and hit that 50 level on the weekly, and we formed uniform action, which is not a good sign. So that generally was suggesting that there was going to be a pullback, and we are getting that pullback right now down the last 4 weeks. If we take a look also in the we can see that there is topside resistance on the hourly, and we did come and make contact with that line a couple of weeks ago and failed. So right now, until we can move above this line, pretty much one can assume that there is no long-term breakout and that the market should continue to struggle over time. In fact, the biggest risk for this market is on the monthly, because it's getting very close to the previous monthly closing low for 2016. The level to watch there for potential break is if it moves below 4947.90. Any movement below that on a monthly basis is going to be absolutely bearish, because at that point it's going to be pushing its monthly RSI to fresh 3-year lows, which is a major sell signal. And also the MACDs already trading at 3-year lows could suggest that that move below 4,947.92, any movement below that in price would suggest that the market is potentially looking to go down. So here the risk is, if it breaks below the recent monthly closing low for 2016, one can assume that there is going to be a move lower and a chance for much lower prices. Let's take a look at the Chinese market on the daily. We can see that we came here recently and hit this top side line on the daily RSI. So hit that, and we are pulling back. That line also happens to be around the previous break level. As you can see here, there was a break. This break in about June of last year brought the market off the highs there above 5,200, and now we can draw a line from here, and you can see that this has become a problem over the last couple of months. Every time we hit that line with uniform action and back below it, we make highs and we get a pullback. Same thing here, and also coming back and doing the same thing in May and again here in April. So the daily does show resistance until we can move above those two lines. So the first line is this previous break line. We need to move above that before we can move higher, and also we do need to take out the top side on the daily RSI. If we take a look at the weekly for the Chinese market, we can see what is going on here is we are coming back to test this low here. This was the weekly closing low at 5,052.78. so this close here is what was being tested. We had broken below that, so this break took place here, and we've come all the way back and we are testing that. So failure to hold above that 3,052.78 level, failure to hold back above that might be an area one can expect this to be a stall point. Also, we are coming back to test a previous line, this line here on the weekly. You can see once we moved above the red line here, the market went on a major run, and since then, once we broke through that red line, it has been giving us sell signal here. We broke through the red line, which was a sell signal during this period here. And now if we can't move above the red line, one can assume that week to week, this might be suggesting that the next swing trade is also to the downside. If we take a look at the Japanese market, you can see here that the Nikkei has already moved its 10-week moving average to fresh 52-week lows. So take note of the fact that the 10-week moving average is already trading at 52-week lows, suggesting that the prices are also going to have to go to fresh 52-week lows, which is generally what takes place whenever you observe that the moving averages have already moved to fresh lows before the price. Price generally will also suggest that we might have to tag fresh lows in terms of the Japanese market. Take note of the fact that on the monthly, here we are already seeing that we are down below the previous 2016 monthly closing low. The level to watch there is 16,026.76. So because the market is below that closing low there, that might be suggesting that this is now another sell signal. Take a look at this move here in the RSI. As of right now, the RSI looks like it is going to be going to fresh 3-year lows. And also we can see that the MACDs are pointing down, and also MACDs are trading at 3-year lows. So here the risk is pretty much to the downside. Seems like right now this is the path of least resistance. Let's take a look at the Nifty. You can see here that the Indian market also did have a pullback this past week, about 2%. If you take a look at this 1-year weekly chart, so 1-year weekly, we closed here, a close there, and a recent close here, forms a nice straight line, something like that. And you can see that over the last 2 weeks we've been unable to move above this line here, suggesting that as long as the markets are trading below this line, one can expect the market to continue struggling. So that's one observation on this 1-year weekly chart. The other one here is we went above the 50 level on the weekly RSI and back below it with uniform action, which is a bearish short-term situation. Here you can see that there was rejection around the 50 RSI level for the highs there. Also here, uniform activity above 50 and back below it for this highs and a pullback. So here you can see that net one can assume that the market here is still showing lots of bearish action based on the resistance on the 50 level on the weekly, and also resistance on this price channel. If you take a look at the 2-year weekly, so 2-year weekly now, if you take the highs here and draw a straight line connecting RSI highs, you can see that it connects nicely with these points here, and now over the last 2 weeks we've hit that, and we seem to be showing rejection on that line. So net one can see here that the market is pretty much struggling here, and until it can clear the resistance levels that we are showing here, more than likely the next potential continued move should be to the lower side or maybe market sideways. But until we can clear topside resistance, one has to assume that this market continues to struggle. One other observation here is that watch the monthly, because the more the monthly goes back to trade below 50 on the monthly RSI, it would be something similar to this move here where the markets did drop below 50. Right now we are back below 50, so as long as the monthly is below 50 on the monthly RSI, chances are the market should continue to struggle. If we take a look at the French market, we can see here that now that it's back below 2016's monthly closing low. The level there to watch is 43.55. So we can see that any movement below that could suggest that this is where it starts pulling back and pulling back significantly. Also take a look here that the RSI is moving to fresh 3-year lows. So the risk here is for markets to continue pressing the agenda to the downside. Take a look at the MACDs, which are trading at 3-year lows, which is pretty much a sign of a market that could easily drop and go lower. So the risk here is, as long as the market is trading below 53.55, the risk to the downside. Similar to that, take a look at the German market, the DAX, and you can see here the threat is that it moves below the recent monthly closing low. So the level to watch there for potential break is if it moves below 9495.40, so which is this monthly closing low there. Any movement below that would be a sell signal for the market. And also here RSI would be moving to fresh 3-year lows, and the MACDs, which are already trading at fresh 3-year lows, are not helping at all here if you are bullish in terms of expectation. So the problem here is that if the market does slip below 9495.40, chances are markets here are going to be seeing lower prices in the coming weeks. If we take a look at the FTSE daily, we can see that it's been trading sideways pretty much for the last couple of weeks, also trading between the 200-day moving average, which is declining, and an upward sloping 50-day moving average. So a lot of indecision. But if you take a look at this from a daily chart based on the RSI, you can see that we are coming back to topside resistance. So this has been a problem here, and also the line, which has been a problem on the daily RSI, is coming into play. So most of the major highs, for example, take a look at this high here, and also coming into 2016, we hit that red line and we pull back. We've been at the highs of this last couple of weeks. Market's been coming back to that general area and stalling. And of course, to be consistent with other markets, the risk here is if the FTSE does drop below the recent 2016 monthly closing low, and as we've been talking about, that level to watch there is 6,061.61, which is this monthly closing low there in 2015. If it drops below that price range, that would suggest that the RSI would also be moving to fresh 3-year lows, which is a major sell signal, and that would also correspond with the MACDs trading at 3-year lows. So the problem there is if it breaks below 2015's monthly closing low, the risk might be to the downside. If you take a look at the 3-year weekly, you can see here that if you take the highs, there's a line connecting the resistance line on the weekly chart. So going back 3 years on the weekly, we are just coming back to test this top side resistance line. If the market is to eventually really move to the upside, it does need to take out that line by moving above it. But for now, we haven't moved above that blue line, so one can assume that net the market here is looking like, until it can clear that blue line of resistance, that net the next swing trade continues to be pointing to the downside. And if you take a look at the 30-minute chart, we can see that even as we go into the new week, and at the end of this week, you can see here that pretty much the market's been doing its best to clear this resistance level here at about 6,200 over the last couple of weeks, or let's call it for the month of March and April, and that still continues to show resistance. If you take a look at the line connecting RSI highs on the 30-minute chart, we are still showing resistance every time we hit that line. So right now, that's why I'm saying net looks like the market continues to struggle short term, and then the weeklies and the dailies come into play, potentially moving this market back below its 2015 monthly closing low. And again, the risk here is just to make sure that we understand anything below this price range on a monthly chart would be bearish. Let's take a look at the Canadian market, and here we can see that recently we had broke through here. So this break sometime in about April or May of 2015, that was that break in price, and we of course went to this major drop. So the market has come back and is testing that break line. So we can draw a line like that. Right now, it looks like this has been rejected twice on the red line, so pointing to a market that could easily pull back. And of course, on the week, if at some point it moves below 50 on its weekly RSI, expect a big down week whenever that happens. At the same time, we have what could be the formation of a nice crossover here between the 13-week moving average moving above the 34-week moving average. If and when that happens, generally that tends to be a good sign. Take a look at this crossover here. which was bearish, again between the 13 and the 34-week moving average, which predicted that the market would be on a move lower. So right now there's a possibility that this does become some type of a bullish setup if this does cross over. Now the best way to look at this is to set an alert here. If the market moves above the recent 2016 weekly closing high, the level to watch there is 13,522.00, which is this weekly closing high there. Any movement above that would be very bullish, and so we have to watch out for the potential for that to happen. If we take a look at the hourly, we can see that the market is showing signs of coming and hitting this resistance line on the hourly. Hope you can see that. So we've come here over the last couple of days, and every time we try and move above that, we are hit and we show resistance. Same thing here with this double top recently, which connected with the highs here of late last week. So right now, until we can clear that line, one can assume that the market here should continue to struggle. So until we clear that line, one can assume that net markets are due for some type of a pullback, even with a 1% gain on Friday. If we take a look at the Brazilian market, we can see that still, even after Friday's nice move, we are still showing resistance on this line here, which has been a problem since about 2010. So let me draw that a little bit better. So this red line here has been a problem in the Brazilian market going back 2010 here, always giving us short-term highs whenever we hit that line and show pullback, especially if that resistance on the red line is with uniform action. And here we also did break through that. Let's call it a break here in 2014, again, which was the highs there, resistance here on the red line, and coming back and doing the same thing over the last couple of weeks. So that still continues to show that that is a resistance area on the weekly chart. And if we take a look at the long-term monthly chart going back about 13 years on the Brazilian market, you can see that the most important thing here that is developing this month is we are moving back below 50, suggesting that that's another resistance area. Over the last couple of years, every time we go above 50 and back below it, we make a major high in the monthly. Here we went above 50, back below it for a major high. Here back above 50 and below it for a major high. Same thing here, uniform activity above 50 and back below it for the highs there. Also, there's another line of resistance which I think is coming into play, which is RSI highs line connecting the highs here in 2007, the highs here in 2014, coming in contact with the recent move, and so that is another layer of resistance. So also, if we take a look at the ETF that tracks the Brazilian market, to be consistent with Canadian markets, we can see that short term we have come to a level where we are going to potentially be testing the top side of the hourly RSI, suggesting that around here is where one would expect that the Brazilian market pulls back, also coming back to a level that has been a trouble spot here on the hourly. So I think around here the hourly is suggesting that the market does pull back from around current levels, and here we're trading with the US markets with about less than 2 hours to go before the end of the Friday session. Let's take a look at how the Nasdaq is gonna close on the weekly. So right now, I think on the weekly for the Nasdaq, the resistance level continues to show up. You can see that the Nasdaq has come back and is showing that it is currently, as of right now, unable to move above the top side of its weekly RSI. So for a more in-depth look at US markets, check out my part 1 of this weekend's market analysis. So check out part 1 of the US market analysis for in-depth coverage of US markets. Otherwise, this is how markets are shaping up. We'll see how things go. Until the Nasdaq can clear that line, one has to assume that at the end of this week, and also as we go into the new week, if the market cannot move above that line, the top side resistance line, then one has to assume that the next swing trade is still to the downside. So watch that line for resistance or for a breakout on the weekly for the Nasdaq. Eric Mwathe, Mwathe.com. As always, good luck, peace, and blessings. E-A-C-S.